Hey, good morning, my friends. It's Hammer. Today is Friday, October 17th, 2025. Welcome back to another episode of Around the Water Cooler with Hammer. That's not a very catchy name. Y'all got to come up with a good name for this show. Anyway, hope y'all are joining me. I don't see anybody on yet. I wonder if this thing's even live. Wouldn't that be messy? Oh, it's not giving me numbers. That's why. But Holly's here. Good morning, Holly Johnson. Great to have you here. If you're here this morning, say good morning. I, of course, am Hammer, founder of Originator Success, Grab and Go Social, and Rate Sensei. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, where we today will be talking about what's going on with the regional banks. And if there's smoke, does that mean there's fire? We're going to talk about mortgage rates winning on the speculation bet, how long that's going to work out, and how much love that's going to give us. We're going to talk about how all that glitters is not gold, but gold is damn expensive. So we got a lot to talk about this morning, my friends. I'm going to throw that up on the bottom of the screen so y'all can see it. Don't forget, if you're watching on the replay, give me a hashtag replay in the comments. If you're here this morning, say good morning. If you would like a reminder that I am going live or to be on our text list in case I have a problem like yesterday where I had to keep it super, super short. How many of y'all saw me digging a trench yesterday into the barn? So, which I also noticed it was backwards. I hate that. I hate that the front phone is backwards. It drives me nuts. Anyway, you can get a text reminder at hmmr.io/reminder or use this cool QR code over here, hmmr.io. That's our Hammer Solution short code, hmmr.io/reminder, or use the cool QR code. Let's go ahead and say hi to all of my live friends here this morning. I appreciate all of you. So many of you join me each and every day. Randy Tico, good morning, sir. Silver, also hi. Crazy stuff. Hey, Kelly Hamilton, good morning. Mr. Tickle, I do not have ditch power. They ran lines, but they came in the afternoon. They were supposed to be here in the morning. They ended up coming in the afternoon. They did not have enough time to complete the job. So in order to make sure that I maintained electric in my house over the weekend, what they did was they ran all the lines, but they didn't take everything off the pole. I'm removing a pole and moving a pole. So, but we do have a meter. I just have no power to that meter. But hopefully next week we will be up and running and I won't be on the generator. So good morning, Brandy Brickler, Carly McLeod. Good morning, James Mahan, sir. Great to see you. Candido Diaz, good morning. Let's see who else we got this morning that I might have missed. Sean Segaloff, the Sora MWS champion. It was an MWS champion. I got to have Austin show me more about the Sora thing. Pretty crazy. Deb Dickinson, good morning. Mallory Fotiatis, great to see you. Mallory, what did I just see that you were doing? You had some stuff going on in life that I was going to be like, oh, I saw that on Facebook. You're getting LASIK and your daughter with teeth, right? Braces, if I remember correctly. So that's what Facebook is good for. Kyle Mazikas, good morning. Mike Brown, great to have you here. All right, my friends, let's go ahead and let's dive in. Let's get started. We will jump into it. So remember, today we're going to talk about regional banks, smoke and fire, mortgage rates winning on speculation bets, and that all that glitters is not gold, but gold is damn expensive. All of that pertains to mortgage rates in a way today, so we're going to get into that. But a quick recap on what happened yesterday for mortgage bonds. Take a look here. If you take a look, you will see down here, which you can't see. So let me bring the window up a little bit. Bear with me, y'all, and I will. There we go. Come on. Stop I love how it resizes after I do that. I want to move the window. There we go. Okay. All right. So take a look here. Let me get rid of this in case there's anything that. There we go. All right. So taking a look here, y'all. You can see that yesterday when pricing came out right about here, we had some really nice improvement through the day. Did hold those gains for the day. So, of course, that gives us a smiley face. Holding those gains this morning, even though we had a little bit of a blip, holding those gains this morning. So that is a good sign. Here's the key, though. So it figures it is sitting at 4.0. We want to be watching this 10-year treasury yield big time. Yesterday was the first day since April. It closed at 3.97 right here. We broke into the threes, and it's unlikely that we're going to stay down in the threes, but we want to watch that. That's the reason why we could see some improvement. So yesterday bonds improved. There's some argument on why it happened, but we did see quite a few reprices better yesterday when bonds did improve. So that's the good part, no matter what, however that worked out, that it was good to see. I'm sizing this window. There we go. I'll get this thing where I want it. Yeah, don't worry. Sorry, y'all. I wish it would. There we go. Okay, so taking a look here, watch this 3.999. That's what they would have for mortgage rates, right? 3.999. Watch the 10-year treasury yield. Yesterday, like I said here, it broke below, closed at 3.97. We want to see it hold that way. So rate sheets today are going to be better. In fact, arguably, we're looking at rate sheets that are yesterday. MBS Mortgage News Daily, Matt Graham, 6.23 right before the Fed meeting, 6.22. I think we dropped down to 6.13, didn't we, on that day? What was the lowest? 6.13 is in the last. But let's bring this to, well, not 1980, because let's do 1 year, and then let's bring it. Let's just look at it in 1 year. Hold on a minute. Let's see. So boom, 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 boom. And then we'll creep it a little less. Yeah. So where were we? 6.13 is where we were for that day before the Fed meeting. We had that 6.13, and then it jumped back up 6.22. This is where we're at. Right there. We're back to that level after being up a little bit. I mean, realistically, this is an eighth of a point. We've been in for a month, so it's not a huge difference. And we were right here. We were in this range for the longest time. We broke back down below that range. The thing is, we have to see how long this is going to hold. So keep an eye on this 10-year treasury yield. This is, I can't stress enough. If this continues to work its way down, and sentiment is in our direction, that'll be great. When you take a look at Fed futures, I'm kind of jumping around, but let me finish this and then I'll get into it. So reprice risk on the day is low. We want to keep an eye on that 10-year. If that 10-year bounces up into like 4.02, 4.03, that's likely you're going to see mortgage-backed securities also worsen on the day. They would get worse, and we would generally see some risk of reprice. So you can use either of those two to stay on top of it. Forgive me. I'm sorry. I'm making all those weird noises. Randy Teakle said 6.13 before Powell dumped a bucket of ice water on the rally. Yes, sir. Good morning, Ron Siegel from the road. Thank you for joining me, man. Appreciate you. So the Randy Teakle wrote, hold on, I gotta pop it over here. Phantom reasons. There's the argument on what could have caused bonds to get where they were. Starts with regional banks. So there's definitely some concerns about the regional banks. We had this in 2023 as well. U.S. banks, including Zions Bank Corporation, Jefferies, and Western Alliance, fell sharply on Thursday as investors grew uneasy about risk in the sector, which has been shaken by exposure to 2 auto bankruptcies. So regional banks are of a certain size, they have different rules and regulations than the bigger banks, and there's an argument that some of their that their investments could be a little too risky right now. So Zion's alleges fraud, takes a $50 million charge. Western Alliance has filed lawsuit against a borrower. U.S. regional banking index dropped nearly 4%. Analysts say banking investors are on edge. And when this happened in 2023, mortgage bonds benefited from the safe havens, run to safe havens. But again, it was very short-lived. It did not last long. So the main thing we want to be aware of right now is that rate sheets are better and that things are there. However, we don't know how long they'll stay there. This is, again, just those many windows of opportunity that we've talked about before where they're there and then they might be gone. So tumbling bank shares pulled global stocks lower on Friday when gold hit a fresh peak. As signs of credit stress at U.S. regional lenders, unnerved investors drove them into safe haven assets. Again, one of those safe haven assets, bonds, treasuries, mortgage-backed securities, benefiting from that. As far as the price of gold, I mean, this is insane. I remember when expensive gold was $1,200 or $1,400 an ounce. Gold tops $4,300. At this point in engagement ring, the gold is going to be worth more than the diamond. They can make diamonds in the lab now. Diamonds have gotten to be so much less expensive unless you've got papers, that it's a natural diamond. But lab grown diamonds, beautiful diamonds. What makes them valuable has always been the supply and demand, and De Beers kind of manipulating that market. But gold now, I'll bet you gold is, on a wedding band, on an engagement ring, the wedding band's probably more than the engagement ring because of all the gold. Gold, $4,300. Now, this has to catch your eye because as much as certain stock sectors are growing, there is a huge move. Now, if you also notice, bonds are not the safe haven that they used to be, where we saw more of a benefit to mortgage-backed securities. You're seeing money go into something like gold. I'm not smart enough to know what that means, but I'm smart enough to recognize it means something. So keep an eye on that. We definitely, this is scary. We want to watch that for sure. So Randy says, does high gold and silver prices show savvy investors feel recessionary trends? And that's, that's an argument that could very well be it, Randy. I don't know why, maybe other people have commented on it, people that know more about this stuff than I do, but that certainly could be the case. And you may be onto it. Now, again, couple of things actually that we want to be paying attention to. If we take a look at Fed futures, expectations of a Fed rate cut for the meeting in October at the end of the month, it's 100% expectation. There's that 0.1 that it would be a half point, not going to be a half point cut. That's just, outliers. But we are absolutely, markets are pricing in, and mortgage bonds, mortgage pricing, mortgage rates are reflecting a cut coming in at this meeting. Powell, I don't know, a couple of these articles I got going on here. So let me see here. All right. So Powell has basically come out and said that we would very likely see a cut this month. So markets have priced that one in. When you take a look at what we've got going on for December, that also big. Now, yesterday, when it corresponded, when we saw the 10-year Treasury yield drop down to 3.97 right here, and when we saw, mortgage-backed securities improving on the day to these best levels, one of the things that happened at the same time, yesterday, this column here was up to 15 or 16% actually. Here, it was actually 16%. Markets were actually over speculating that we could see, this would be a 0.5, that we could see a half a point cut at December. So markets are currently kind of they're betting that there's going to be more Fed rate cuts than what the Fed has said. In January, we were at a 50-50. So right now it is more, it's almost back to that. But yesterday it was much higher In fact, let's see, depending on what time they do that. Yeah, you can see it right here. So it was 55%. Now it's down to 50% expectation of a cut to come in January. But if you take a look at that Bloomberg article right here, look at this chart, and it kind of shows. So the yellow is the market implied path, and the black is what the Fed said that they would be. So at the end of 2026, the Fed said basically that it would be around 3.25, and yet markets believe that it's going to be, that's about 2.75, so about a half a point lower. Markets believe that we're going to see a rate cut in October. And it's funny, this is not accurate. Oh, it would have to stay the same because they're going month by month. So there's no meeting in it. That's why it goes flat. And then another cut. So markets and the Fed agree that we're going to see 2 cuts by the end of the month, or by the end of the year, rather, 2025. Then markets believe that we'll see, here's a March cut. So they're thinking a January cut because that goes down, a March cut, and then a May cut, and then an August cut. And that's really what, markets really believe that we're going to see that happen. Why would that have to happen is if we were to see a weakening economy and a weakening labor market. So there's questions about that. The reason that we want to be apprehensive right now is if this blows over, all the fear about the regional banks, again, it's not a big driver and it's not a big deal, but it's definitely a contributor to why we're seeing mortgage-backed securities continue to move upward and why we've seen that 10-year treasury yield that is moving downward. So it is a contributor. So we want to be aware of that one. We want to keep an eye on that. That's number one. Number two is the yeah. Ron said with the government shutdown, I doubt there's enough data to support a 50 basis point cut unless there's a liquidity squeeze that Powell has hinted at. But with the liquidity squeeze, he was talking more about stopping quantitative tightening than he was about cutting more. So Jerry said, feels like slow playing to get bigger and longer run on rate cuts as market feels the pain. That's possible. Gold has trended upwards since 9/11. Yeah, but man, it is insane with how expensive it is. Ron said he would short gold right now. You don't think it's going to hold up? I don't necessarily blame you. John Melnick said it seems like commercial real estate is still shaky, and yeah, TGIF, dude. Depending on the market, New York commercial real estate has rebounded quite a bit, and it continues to rebound as they've demanded to get office workers back in. So that's made a big one. All right. Well, that's what we got going on, my friends. I think we hit it everything. Let me go ahead and throw the lock advice down at the bottom. Once again, there is little urgency to lock at the moment, although it does remain unlikely. We're seeing rate sheets improve, but you're talking about 1/8 of a point. I don't consider that to be a big drop in rates. We're not going to see rates at 5 3/4 or 5.5. I mean, without your PAM points and rebate stuff, but we're not going to see native rates, before LLPAs drop into the 5s yet. We're just not there. There's no reason to expect that or to see that happening. So really nothing to get too excited about with that. But there's no urgency to lock. Let's keep an eye. Watch that 10-year treasury yield. If it ends the day back up in around 4, it may want to lock some loans closing near term because we may creep a little higher. But even if we creep, it's creep. We're just kind of moving lightly in the wind with market sentiment. But that's it, my friends. Don't forget to go and check out originatorssuccess.com. Find out how we help you get loans from Google and social media. Remember that you can sign up for our free email lock advice at ratelockadvice.com. You can sign up for our text alerts at ratetextalerts.com. And there's $7 a month. You don't have to spend a lot of money to protect your pipeline. So, all right, my friends, I'm going to wrap it up. TGIF. You guys want to see how much of a mess is it out the window? Here. Anyone that's still sticking around and wants to stick around for a minute, I'll show you out the window some of what we got done with the barn here yesterday. All my trenching and digging and all that stuff. So as I make you car sick getting out there you go. That is where I had to dig all the way down. See that telephone pole that's there? That pole is going to be removed. And we ended up putting an underground service. It's across the road at the other side of those brush. And then I had to run a trench all the way down. Here, I'll show you some. Let me show you. I'll share some screenshot pictures, which will help to clarify this. Again, any of you that want to stick around, I appreciate you. You certainly don't have to see all my goofity goo, but all right, let's see. Where are pics? Here we are. And let me share my screen. Entire screen. Okay, so let's go into library. All right. So this is what I had to run conduit and running that line through here yesterday. Here's the Kubota. Let's see what else we got here. So, man, this thing is a beast, this trencher, by the way. Look at that. Digging that trench with the trenching machine is what that thing looks like. It definitely cuts in. I did hit some big rocks that I had to work around, but overall I got pretty lucky with this. But I had to dig this out a little bit wider to make sure it was gonna get that conduit up there. And here was my fiber optic cable, which is above ground, not good. So I dug that back up and popped that in there. But there you are. It comes all the way down. Got new power going to the pole down below. That is where, you can kind of see it, I think, in one of the previous ones here. Yeah, so see, here's that green box right here. Right here, you can see. And so what that does is the power from the pole is now here, and the power to go up to the barn is here, and then a line runs down here and across, and it's going to go up this pole, and that'll eliminate the pole here. And this line here will go to my house, and then this line here will go to the barn, and this will be the new source of electric. But they didn't power it yet, so but there it is, digging ditches and marking out where it's going to go. And this is some serious friggin' power line. It goes up to the unit, and there you are. So they have to come back and finish that work. Yay. So that's it. Yeah, I play with my grown-up toys. And I love my backhoe and my tractor. I got 420 hours on that beast already. So, all right, my friends. Well, again, thanks for sticking around. Appreciate you. Hope you all have a fantastic day. I'll see you on Monday. Take care, everybody. Bye-bye.